So good afternoon, traders. It's Thursday, the 11th of February 2021, and the time has just turned 25 minutes past 2 p.m. UK time. So as you will probably notice by the times, I'm here in the afternoon in the UK looking at the markets to try and now start to build some momentum for the trading year of 2021. Now, you will have seen in my earlier video that what I said to you is that I'm going to be looking at one particular currency for video purposes. That doesn't mean it's going to be one currency that I'm trading, but for one particular currency for my video and putting onto YouTube and showing you what I'm doing, I'm going to be focusing on one currency. Now, that currency is the Australian dollar. Now, as I said in my earlier video, there is no, it's totally an arbitrary reason. I chose that currency totally by chance. I put currencies into a hat, put my hand in, pulled it out, and basically what came out was the Australian dollar. So moving forward now into 2021, okay, I'm going to be looking to give you how I view the market, or how I view the Australian economy fundamentally. And then I'm also going to show you trades that I take and the reason that I'm taking them based on that fundamental analysis. Now, the first thing I want to do is I want to apologize because it's the afternoon. I normally shoot my videos in the night, okay, and I've got a lot of lighting in this room which helps me with that. However, it's so bright out here, as you can see. Obviously you can't see my face now because there's a lot of light behind me. So I want to apologise about that. And what I really need to do is look at that situation moving forward for this room, okay, to see if I can't, I can't be able to shoot videos regardless of the light outside. So I just want to apologise for that. But, you know, this is not what you're going to be concentrating on. Hopefully this is what you're going to be concentrating on. So what I said was, as I said, the Australian dollar is the currency of focus for 2021. I'm going to be trading other currencies that I see opportunities on. I may shoot videos on those, I may not. But what I aim to do is throughout 2021, I aim to show you my thoughts fundamentally. And then I'm going to, like I did last year, as far as technicals are concerned, I'm going to show you my entries, my targets, my losses, that sort of thing, just to show you what I've learned, okay? Because as I said in my previous video, I've spent the last 4 months with my heads in books, fundamental analysis books, which I now feel that I want to start showing you and see if we can't make some money this year. So let's see how we go, traders. I'm going to just pause the video there for now and I'll get myself set up and I'll come back and we'll start breaking down the Australian dollar. We're here, as I said, we're here on the 11th of February. January's a gone month. There's been a lot of drama in January, okay? I've got that out of the way and now here we are. So I'm just going to pause the video for now and I'm going to come back to you and start breaking down the Australian economy. Thanks, traders. Okay, traders, so I'm back, and as you can see, only a few minutes has passed since I paused the video. So where do I start when I'm looking at a currency? Where do I start when fundamentally I'm looking at a currency? In the past, as a technical trader, I would have gone straight to the charts, and I'm not knocking that because there are a lot of people out there who make a lot of money as technical traders, but I wanted to see if I could improve my skill. So where do I start, guys? Well, the first place I start is I go and look at what the RBA are saying. Now, here I am. Here we are on the website. This is the website. You can see my date down here, 11th of February at 2:30. Okay. So we're here live on the Reserve Bank of Australia's website. Okay. And I want to bring your attention. They've already had their meeting on the 2nd of February, their monetary policy meeting. This meeting here, or these minutes here, are the minutes from that meeting. And these, as you can see, were delivered on the 5th of February. Now, I want to bring your attention to some things that jumped out to me in this statement here, this opening statement. And I want to highlight to you why looking at what the central bank of any currency or any economy is important. So as I'm not going to go through the economic outlook, okay, because that part, you know, we could be here for hours, and I want to try and keep this video as short as possible. So what I am going to go down to is I'm going to go down to the monetary policy that the RBA is looking at, and I want to try and explain to you what I'm seeing. Rightly or wrongly, this is what I'm seeing. Now, in this first paragraph here, okay, what it says is the first point is one that we covered at the committee hearing in December. That is, the RBA's monetary policy package is working broadly as expected, and it is helping to support jobs. So what the RBA is saying is that the package they put together to deal with the pandemic, to deal with the recession it's been taken to, broadly is working. Together, the bond purchases, the term funding facility, the 3-year bond yield target, and the record low cash rate have kept funding costs low. Okay, have kept funding costs low for all borrowers and helped ensure that the banking system is able to provide the credit that is needed. That's really, really important. That just in that statement there tells a whole story. What the RBA is saying is that all of these different things, bond purchases, term funding facility, the 3-year bond yield target, all are resulting in keeping the interest rate low. Okay, they are keeping the interest rate low. There's a reason for that, which we're going to come back to in a moment, but I just wanted to home in on that point. The next point is also really significant to me. And what he says is, while the Australian dollar has appreciated in recent months due to weaker US dollar and higher commodity prices, a larger appreciation would have occurred in the absence of the RBA's measures. So what does that mean here, guys? Well, what that means is all of the measures that the RBA have put into place, low interest rates, 3-year bond yield target, bond purchases, all of those have helped to keep the Australian dollar down. However, due to a weaker US dollar and strong commodity performance, the Australian dollar has still appreciated. But what the RBA is saying is it would have appreciated a lot more had they not carried out these measures. Okay, keep that in your mind because that's really, really important. So I'm going to move to the next section now. Okay, and let's just highlight that. And what it says is the second point is very significant. The second point is that very significant monetary support will be maintained in Australia for some time to come. It will still be some years before inflation is sustainably consistent with the target and full employment is achieved. It is therefore important that monetary support is maintained. The day will come when it is appropriate to be providing less support, but today is not that day. So what you have here is the Governor, Philip Lowe, saying to the government, saying to the press that it's important that monetary policy is maintained. Okay, remember, a central bank's aim. What's the RBA's aim in this case? Because the RBA is the central bank that we're talking about. The RBA has several goals: to keep inflation within under control, within a certain rate, maximum and higher and upper and lower band, to try and get full employment in the Australian economy, and also for the well-being of the Australian people. Okay, and to keep their currency stable. So that is the mandate of the RBA, the Australian Central Bank. And what the governor is saying here is that it will be some years before inflation is sustainably consistent with the RBA's target. Some years. Keep that in your mind. The day will come when it will be appropriate to provide less support, but today is not that day. That's telling you and telling us that lower interest rates are here for some time in the Australian economy. Okay, so as a net result, what they're going to be trying to do is trying to keep the Australian dollar cheap. Okay, now whether they're going to be able to do that or not remains to be seen, because as you can see here, as you can see by what he said, the reasons for the Australian dollar appreciating are a weak US dollar and strong commodity performance, but I'll come back to that. The third point is that the RBA's ongoing monetary support will continue to purchase bonds by the Australian government and states territories at the completion of its current 100 billion program in April. So what they're saying is the current round of bond purchases, which is helping to keep that interest rate low, okay, helping to keep the currency low, okay, will end in April. However, a new round will start after that. Moving on, in considering this issue, the bank has took account of three factors. The effectiveness of the bond purchase to date, the decisions of other central banks, and most importantly, the outlook for inflation and jobs. This is what they had to say about that. In terms of bond purchases, in terms of effectiveness, the bond purchases have helped to lower interest rates and meant that the Australian dollar is lower than otherwise it would have been. It is difficult to be precise, but we estimate that our bond purchases have lowered yields on longer-term Australian government bonds by around 30 basis points. They have also contributed to lower spreads on the bonds issued by the states and territories and added to the liquidity in the Australian financial system. Australia's government bond markets continue to function well. What the governor is saying there, okay, is that the bond buying program is working, okay? It's helping to push down or keep down the currency and also interest rates, okay? Now, in terms of what other central banks are doing, many have recently announced extensions to their bond purchase programs. This is relevant to us because we live in an interconnected world. If we were to cease bond purchases in April, it is likely that there would be unwelcome upward pressure on the exchange rate. This would further delay the already slow progress in jobs and inflation. Guys, he's telling us exactly what his thoughts are there, okay? If we were to cease bond purchases, it is likely that there would be unwelcome upward pressure in the exchange rate. Guys, that's proof that the governor of the RBA is forcibly trying to keep the exchange rate, the Australian dollar, low. And if it was to climb, it's going to be unwelcome. And why? Because it's going to push up inflation and it's going to push up the attractiveness of the Australian economy. Let's have a look. Let's push on. And I don't want to read all of this, but I'm trying to give you a feel for what they're thinking at a central bank level. Given these considerations, and with the cash rate at its lower bound, the board judged that it was in the national interest for the bank to continue with its bond purchases after the current program is finished. And it tells you there about how much they're going to be buying per week. Let's have a look at the next section. More about bonds. The fourth point is about the funding facility, basically saying that the funding facility for businesses is going to be kept in place. They're supporting the market, guys. The funding facility for banks is still going to be kept in line. They're there supporting liquidity. They're making sure that there are funds available for banks to lend, because that's how the wheels turn on an economy. The next one, fifth point, 3-year yield target is working. They're keeping it the same. Let me just go down this. Okay, So what this last bit talks about, okay, is it talks about they're not changing the interest rate, they're keeping that at 10 basis points or 0.1%. Okay, that's where they're keeping the interest rate. And look at this statement here, guys. The board has no appetite to go into negative territory, and has done as never. The board has no appetite to go into negative territory, and has done much as it reasonably can with interest rates. What does that mean? What that means is they're just not looking at negative interest rates. Okay, they're just not looking at them. So when we're looking at divergences between economies and central banks, this is one of the things that comes up. When you've got a bank, when you've got an economy that's looking at negative interest rates against an economy that isn't, there's an obvious divergence there. We'll come back to that later. So that, guys, is what I wanted to. That's the first part of this presentation with regards to what the central bank is thinking. And just to recap, basically, the central bank are going to leave things the same. All right, they have some current upward pressure in the exchange rate. Okay, but the way they're viewing that is it would have been a lot worse if they hadn't have done what they've done here. Okay, but they'll be keeping an eye on the exchange rate. Now, obviously, the Australian dollar is making its way up, and we'll go into that in a short while. Okay, but this is a fundamental thing, so I'm not going to spend too much time in the charts here. So I'm going to leave it there for a moment on central banks, and I'll come back with the next section, which is about China, how it affects Australia and commodities. Speak to you very shortly, folks. Welcome back, traders. So the next thing I want to focus on, guys, is I want to talk a little bit about how Australia makes some of its money. Not all of its money, but how it makes a big portion of its money. Now, the Australian economy is what's known as a commodity currency or economy. So what that means is commodities such as oil, such as gold, such as metals, form a big part of the income of the Australian economy. Now, the biggest performing commodities in the Australian economy at the moment are iron ore and coal. Okay, they're one of the two of the biggest commodities which are being exported by the Australian economy. Now, obviously, what the Australians are trying to, I say obviously, this is my thought on it. What I see here is that when a country wants to buy coal or wants to buy iron ore from Australia, okay, what happens is, let's say for argument's sake, the United States. Let's say the United States wants to buy iron ore from Australia. The Americans, the USA, have to pay for the Australian iron ore in Australian currency, in the Australian dollar. Okay, so what the American economy or government has to do is they have to sell American dollars to buy Australian dollars so they can pay the Australian government or companies for the iron ore, thus pushing down the price of the US dollar and pushing up the price of the Australian dollar. Now, with regards to iron ore and coal, okay, since the pandemic, commodities have been probably the saving grace for Australia. Now, don't get me wrong, Australia has a lot more things that make up its GDP, that make up its income, okay, or its sales, if you like. Okay, it has a lot more than iron ore and coal. But I'm focusing on these two because there's a knock-on effect of these two commodities, and that knock-on effect, and that there's a bear in the room, and I wouldn't call it a bear because there's a saving grace in the room, and that saving grace is China. Okay, why do I say China? Well, first and foremost, China is Australia's biggest trading partner. Okay, China buys more from Australia than any of Australia's other trading partners. So as you can imagine, the Chinese economy is really important to Australia, because should the Chinese economy take a dip, so does that has a negative effect on the Australian economy based on what they buy. Now I want to show you some things I've been looking at with regards to China and commodities, and why I think they're so important when I'm looking at potentially trading the Australian dollar and which direction I'm looking to trade. So remember, just recapping, the RBA are keeping the rates low. The exchange rate has been kept low. Okay, so what that means is that China can actually buy these commodities more cheaply because the exchange rate is so good between them. Now let's have a look at China. This is a chart of, we're here on trading economics, and trading economics is an excellent tool. If ever you want to know any of the statistics of an economy, trading economics is the place to go. Now, what this is a graph of the Australian economy, the Australian GDP, which is here in black, and the Chinese GDP, which is here in blue. And as you can see, I've plotted this from 2012, okay, just to show you what's been happening. Now, as you can see, there is a direct correlation between these two economies, isn't there? Because if you look at what happens here, if you look at this point here, when China took a dip, okay, when you look at this point here, when China took a dip, not long after, and this is COVID, by the way, not long after, Australia took a dip. And then as China bottomed, look what happened in Australia. A month or two later, maybe, Australia picked up. Now, prices since pushed up, okay? And remember, this is GDP. Prices since pushed up and has tailed off a little bit. Now, we could be expecting some downside in GDP for the Australian because of what's happened here with China. However, this is somewhat distorted, this huge swing here, because this is all COVID related, and the Chinese economy is is the economy that's probably just recovered better than anyone. Okay, that economy has just had a massive bounce back, and the economy is now settled back in, as has the GDP in Australia. So what we're seeing here, and if you look at China, if you look at this -2 figure here, okay, if you look at that -2 figure from 2012, GDP did not go above that -2 figure, okay? It didn't go above that -2 figure. And then it dipped, COVID, it pushed up crazily again because of that massive bounce back after COVID. Obviously, these things have to even out, because it's not, the economy, the GDP is not going to stay up there forever. And then it's come back down and it's settled in, but it's settled in above the level where it was before, since 2012. China is back in business, guys. The Chinese economy is back in business. So what does that mean for Australia? What does that mean for coal? And what does that mean for iron ore being purchased from Australia? Well, what I see, if I go now onto trading economics, and what I have here now is a weekly chart of coal. Okay, let me just pull that down a bit. This is a weekly chart of coal since 2012 also. And what we're interested in is, look at this. From the 17th of August 2020, look at what's happened to the price of coal. Okay? Look at what's happened to the price of coal since in less than a year. Look how much the price of coal is on a streak. It's on this way up. That's going to be helping. That's going to be helping the Australian economy, because where do China get their coal from? Or most of their coal from? Australia. Let's look at iron ore. Let me see if I can find iron ore. There we go. Let's look at iron ore. Let's have a look at iron ore. Okay, just let that populate. And let me just go weekly. And let's just go all. Is it all or is it no? It's 10 years, isn't it? So here we are again from 2012 to 2020. Okay, sorry, 2021, which is where we currently are. So look at this, guys. This is where the price has peaked in December. Okay, prices peaked in December 2000 and 2020 for the price of iron ore. Okay, and since that date, the price of iron ore has never been that high since January 2013. The highest iron ore has traded over the highest price it has traded since 2013, guys. And I feel that the price of iron ore and coal is going to continue. Such is the demand of China. It is important to Australia that China's economy keeps going. And on the base of this GDP, okay, China's back for business. So it all looks kind of rosy for Australia, doesn't it? And it's not as simple as that. Don't get me wrong. There are other things that come into play here. There are other things to look at other than these two. But it's important to consider these things when you're looking at the health of a country. Okay. Now, this is one of the reasons, and what we're going to have a look at in a minute is the Australian dollar. Okay, and we're also going to have a look at the charts of how these commodities have affected the Australian dollar. Okay, but it's important to have a feel for what the thoughts of the central bank are, what they're looking for, okay, and what's actually happening in the real economy. And as it stands, what I can see here is that Australia has currently being supported by commodity prices in the majority, not just totally. There are other things, but in the whole. Let's move on. Next thing I want to look at now is let's go here and let's have a look at this chart. Let's just minimize. So what we have here, and I'm not going to use the Australian dollar, I'm going to use the Aussie dollar, Aussie US dollar. Okay, let's get rid of that. Now here we are on the monthly chart of the Australian dollar, US dollar, the Aussie US dollar. Okay, now this dotted horizontal vertical line, if you look at the date below, you'll see that was March 2020. March 2020 was when catastrophe hit with the first signs of the COVID cases. And as you can see here, prices between the Aussie dollar and the US dollar, the Aussie dollar is sold off right down into that point. But it was actually at that point where prices began to rebound. Okay, it's actually at this point where prices began to rebound. Now, if you think of where prices have rebounded to, okay, look at where the Aussie dollar was trading in 2017. Now, if you remember what the governor of the RBA said is that the current appreciation in the currency has been put down to a weaker US dollar, and strong commodity prices. And I'm going to look at that in a little bit more detail. So, if you are the Australian bank, central bank, the RBA, you want to keep this interest, this figure here, this exchange rate cheap, okay? And what the governor is saying is that yes, prices have appreciated, but they would have appreciated a lot more if it wasn't for low American dollar, US dollar, and great prices in commodities. So the Australian government at some point in the future may have a battle on their hands to keep this exchange rate down. And that a lot of that is going to depend on some of the very things they've said. It's going to depend on China, because if China keep buying iron ore and coal at the rate they are, or if that increases, this is going to go up. Okay, there's a pattern in here from a technical standpoint. There's a pattern in here. Okay, and I think there is much more upside if you think about what I'm saying here. Okay, I'm very, very bullish the Australian dollar. Okay, I'm very, very bullish the Australian dollar for these reasons that I've just been going over. Now, I just want to highlight some things. Let me just bring this up. Now, what's this? That's not the one. This is the one. Now, remember we're here on the monthly chart, and what this line here is. This line here is I've plotted a comparison in the Australian dollar to iron ore, And if you go to this line, if you look at what's been happening, and obviously the price of iron ore has been creeping up. In fact, let me just take this and let me just run it across the bottom there, just to give you an idea of what I'm saying. Okay, so as you can see there, the price of iron ore, you've been getting higher lows in the prices of iron ore, higher highs too. Okay, however, the Australian dollar was pushing down from this point here. And then we had COVID here. If you look at the bottom there, we have March 2020, COVID struck. Look at what's happened since then. Look at what's happened to iron ore, and look at what's happened to the Australian dollar, US dollar. I think if we needed any proof that there's the iron ore, iron ore is playing a big part in this appreciation here, I think here it is on this graph here. Okay, let's just get rid of iron ore for a moment and let's have a look at coal. Oopsie daisy. Okay, so coal looks a bit different, doesn't it? But here's the COVID. Here's the horizontal line where COVID is, and prices in coal continued to fall into December 2020, and since then prices pushed up. It's taken out this high here. Does that mean higher prices? This could actually just be a correction in this downtrend. Sorry, let me get this little section here. Let me get my arrow. This little section here and here could just be a correction in this downtrend in coal. However, there's something I want to show you if I can find it. Let's just get rid of those arrows. Let me just go back to my little China growth situation. In fact, no, let me go back to here. December 2020 is when coal turned, okay? December 2020. Keep that in your mind, December 2020. COVID is when iron ore turned. So if I go back to here, let's see if there's any comparison. Let me just let's see if I went down to 3 years data. Does that tell me anything? No, I know what I'm looking for. This is what I'm looking for. One month chart. Look at this. Iron ore. From COVID, this is where it really took off. Let's find coal. Did you see what I'm getting at here, guys? I am bullish the Australian dollar. Now, obviously, when I look at other currencies, I have to do a similar thing here, don't I? I have to look underneath those currencies or look into those currencies and see what's going on here. And look at this. Let me go right back. What is this chart? Let me just have a look at this chart. Oh, this is daily. I want to go up to the weekly at least. Okay, that's better. Okay. August 2020, like I said just on the other chart, is where coal bottomed and has taken off since. August 2020 is where coal bottomed. Is there anything else I can put to that? Let's have a look. Let's just have a look here. So this massive swing here in this quarter here with GDP in China was in July. Okay, the massive swing of June, July, August. You know, everything's, you can kind of see where the Chinese started buying. You can see where the Chinese started buying aggressively coal and iron ore. So, guys, What that means for me, let me just get rid of this. What this means for me with this currency is I'm very bullish. And I'm here on the monthly chart, and I actually think that there is much more upside to this pair. Okay, so that's what I wanted to break down for you. Sorry, we've been here 35 minutes. It's a long video, but I just wanted to give you how I look fundamentally now. The work that goes into looking at an economy fundamentally. And I now have a direction. I will keep an eye on the news. I will keep an eye on the governors and the managers of the RBA and any speeches that they have. I will keep an eye on that throughout the year, and I will adjust my positions accordingly. But at the moment, I feel that the Australian dollar is headed only one way for now. I'll leave it for now, traders. Let's get to work.